there you go, guys. Federal Reserve has finally cut rates by 50 basis points, and this is the first rate cut since the tightening cycle started back in the 2021. And mind you, the 50 basis point is the aggressive rate cut Fed has ever done in an emergency situation. Okay, last time it was done in the pandemic era, and before that it was done in 2008 financial crisis. So 50 basis point cut straight away has only happened in an emergency situation. Okay, and if you are relying on NBER to declare recession officially, I can remind you that in 2008 they only declared it months after it actually happened. Okay, so they are always backward looking at the old data and then declare, okay, yes, we were in recession 6 months ago. Okay, so what happened? So the market was already pricing in 50 basis, but I think there was a debate between 25 and 50. Like, there was no question that Federal Reserve is going to keep the rates as it is. So it was a consensus in the market. It could be 25 or 50. I think there was a expectation to have 50 basis point cut higher than 25 basis points. So basically, they did not surprise the market. Market was already priced in. It was a buy the rumor and sell the news kind of thing. Okay, so we did not see a high volatility in the market. Stocks didn't move much. There was some short-term volatility when they announced the rate cut, and when the press conference started, things were getting back to normal. Okay, so what's going to happen? Basically, 50 basis point cut is aggressive. It means that something they know is going to break pretty soon. They are being proactive to start cutting rates aggressively. Okay, we have seen unemployment has been higher to 4.5, and that's an old data, right? I work for Cisco. We announced 7% workforce reduction globally this week. Around 4,000 people are being laid off right now, and this is the second time Cisco has announced layoff this year. Last time it was in February. Okay, I've heard Zendex announce a layoff. I've heard IBM announce layoff. I heard TD Bank announce layoff. So the big corporations are announcing layoff left and right. So this unemployment data that we have, 4.5 in the US and 6.6 in Canada, it is more likely to go up in the coming months. Okay, so the unemployment is climbing up. They are worried about the economic contraction. Canada is already in technical recession. If we measure it based upon GDP per capita, we are in recession for the last 6 quarters. Okay, US, the reason why we have a positive GDP number is because of the government fiscal spending. They have been spending like drunken sailors, which is why it is keeping the GDP positive. If you remove that government spending, US is also in recession. They're not officially declaring it, but that's what they're seeing right now. They know that. That's why they're aggressively cutting rates. Otherwise, they would have gone by 25 basis points. It's an election year. Okay, they're saying they're not political, but they are political. I mean, come on, like, who are they kidding? Okay, so what's going to happen? Bank of Canada will follow the suit. Most likely, the chances for Bank of Canada to cut 50 basis point is much higher. Okay, so they were likely to do that because Canada is in a worst situation compared to US. Okay, Canada is in technical recession. The unemployment is much higher. Housing market has been the engine for Canadian economy. It's not growing. It's contracting. The prices are coming down. The sales is down. Even though people were projecting that once the rate cuts happen, the housing market will boom again. Didn't happen. And I've been telling you guys that economy has to have something to move things forward. Okay, right now economy is contracting. We have unemployment rising up. So in that scenario, it's a very less probability that the housing will boom again. Okay, unless unemployment goes down, sentiment gets better, economy gets better, then yes, I can tell you the housing will likely to go up. But at this stage, I don't think so. So what's really happening here? So Fed makes it look like they are the most clever, intelligent people in the room, and they know exactly how to micromanage the economy. But in reality, they always respond to crisis. History has shown us COVID, 2008 crisis, dot-com bubble, 1970s recession, 1940s recession, always respond to a crisis. They never done this whole soft landing thing. Okay, this time I don't think it's different. They're responding to crisis. If you look at US 2-year treasury, which Fed actually follows them. Okay, Fed funds rate, look at this chart. Fed funds rate has been following a US 2-year treasury rate. Okay, this chart is a proof. So right now US treasury rate is 3.6%. So you tell me how Fed cannot cut rate in order to match the expectation by the bond market, which is 2-year treasury yield for a short-term rate. So what's going to happen? I think the market has already expected it, so there's no immediate reaction, but it's all depend upon the liquidity. If the global liquidity is going to flow in the market, it can drive asset prices up like stocks and Bitcoin. I think the investor will be very cautious because of the election. Once the election is done, then we may be able to see how the pendulum is going to swing. Either way, it could be a bullish, it could be bearish, depending upon how the narrative is being built in the market. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe the video, and I'll see you in my next video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.